If there's a failure to deliver, it might be at $55 or something, and you wake up the next morning and suddenly it's above $100 or $80, and you didn't have a chance to buy between those times. It would actually be good for silver to sort of take a rest, and I always expected it to as it runs into the $50 area. If it goes sideways for a couple of weeks, it works off the overbought condition that it's in and allows a lot more room to run. However, in a currency crisis, in a market crisis, all of that stuff, overbought conditions, it all goes out the window. None of that technical analysis matters when you have a true panic with the precious metals. The precious metals are a very special asset class that sort of obeys its own rules. Hi, everyone. Yesterday, I released a couple of videos, and we actually had to split it in half because stuff was happening so fast. We had to, the editor was out of time. And so Dan put out the first half, then we put out the second half. Well, there's still stuff happening in the silver market that is extremely important that you need to know about. So this video sort of continues on with our silver update. Alan has come up with some brilliant stuff here. Alan, why don't you show us what you've got?
Yes, will do, Mike. So I want to start here with a tweet from Make Gold Great. Here's a quote. Silver is going to fail to deliver, in my eyes, within the next few delivery periods. So I think before year end, you're going to see the silver market break. And that's from Bill Holter.
And you know what? Bill, I believe, is right. Once silver passes this $50 threshold, and we're just, that's what my previous videos were about. We're just about there. It gets into the news cycle. The mainstream media will be reporting on this. And as it goes north, they are going to be reporting on it at first, a few, and then it's going to be every week, and then every day they're going to be hearing about silver, the general public. Now, it also goes along with October is the spooky month, this month that is famous for crashes. And there's going to be a video upcoming that's all about the economy and showing you where we are right now. And we really are teetering on that knife's edge. Bill is probably right. As it goes past 50, 55, 60, and people learn about all of the fundamentals underlying silver, about the fundamentals underlying, the video that we did showing that there was $20 trillion worth of liquid capital that can come chasing any investment in like 24 hours. That was just America. When you take it to the world, I covered that in one of my videos that I just recorded. It's actually 3.5. If you take 1% of the 20 trillion, that's 200 billion that could come chasing silver. There isn't enough silver at these prices to support anything near that. And 1% is a nice conservative figure. But when you add in global currency supply and global stocks and global bond market, now you're at 3.5 trillion that could come. It's 350 trillion is the total of those things. You're at 3.5 trillion that could come chasing the precious metals. And that's only 1% of these things. The liquid capital, the stock market, and the bond markets globally. Because when we talk about how much gold and silver there is, that's globally. That's what we're talking about. So you've got to compare oranges to oranges. So, that's right. And gold is orange.
That's right. Exactly. Well, in a recent video, you did mention that silver is setting new records on the yearly close and the quarterly close, and we're probably going to get a record on the monthly close. And I want to talk about another record. It's actually the length in the amount of time that silver has closed above $40 an ounce. So I want to take a look at the market structure and see how this bull run is a little bit different than the previous ones. So this right here is a chart of silver. Obviously, it's that long-term cup and handle, that 45-year cup and handle that you identified more than a year ago. And I took the liberty of coloring the time it's spent above $40 an ounce in red. So we can see that there's really three distinct phases, and I want to zoom in on them. So this one back here in the 1980s looks like this. This is a 2-month period, and there were 6 days in a row silver closed above 40, and then another day and another day. So 8 days total. But you can see this isn't really sustained. It didn't really feel strong. You can see that it kind of sputtered and died out. So anything you want to say about the 1980s peak here, Mike?
Well, that was a super spike. And compared to the rest of the economy, that was a hyper bubble, which gold and silver are destined for far greater hyper bubbles this time, because this was only Western Europe and North America driving this. Australia was included as well, but it was 10% of the world's population. This time it's going to be everybody. There was, I think, I can't remember the amount of, we're up to 80 times more currency now that you've updated it. When we released the book, it was 55 times more currency on the planet. And all of this, and then the size of the bond markets, and then the trouble that the economy is in, the levels of debt to GDP. In 1980, it was down at 30%, not 120%. The economy, the US dollar, everything is in a vastly different position than it was during those 6 days and the added 2 days. So there was only 8 days when silver was above 40. And like I said, gold and silver both went into super spike hyper bubbles compared to the rest of the economy. And so if you put a super spike today with the growth of everything else we've had, you and I come up with these astronomical figures that sound irrational, yet if you do the analysis, it's the only rational outcome.
Exactly. It's all supported by numbers. We just take the numbers. What does it imply? Okay, this is the math. So
yeah, it's just history repeating, adjusted for inflation.
yeah, exactly. Well, let's zoom up on the next peak in silver. This is April of 2011, and it's been 17 days in a row above $40 an ounce. And you can see it did have some momentum, obviously getting there, sustained over several months. And then it dropped off and sort of petered out. And then something similar happened later that same year. But before I move on, is there anything you want to say about this chart, Mike?
Yes, because this is silver. And I knew that this wasn't the top, because when the top comes, gold and silver will be peaking simultaneously. This happened in April for silver, but August for gold. And that is not indicative of people being worried about the economy or about a currency crisis. That is people chasing a bubble, basically. It's fear of missing out. It has nothing to do with the underlying fundamentals. So this 17 days, it was spectacular. I remember it. One of the things I wish I could have advised people to do this or do that. I never give advice, but silver had taken one great run, but I can't tell people that it's time to sell when I don't know if things are going to keep on going north, and whether or not the dollar is in trouble. I have to just stay back and say what I'm doing and never give any financial advice. And I was not buying silver on those days because the gold-silver ratio was telling me not to. Gold was not going into a peak with silver, and the gold-silver ratio was gold was becoming undervalued compared to silver. And so it was telling me to buy gold, and that's exactly what I was doing. So I never purchased silver above 33, but I'm about to. So because the gold-silver ratio is telling me that silver is still a bargain, a screaming bargain.
Yeah, can't argue with that. Well, beautiful. Well, later, the second half of this year, so this is what we're looking at here is a chart of the first half of 2011. So now let's look at the second half of 2011. And the price of silver went above $40 an ounce 7 separate times, but it really failed to stay up there at any sustained level. It went up for 1 day, and then again for 1 day, and then 4 days, and 2 days, and 5 days, and 14 days, and then 1 day. So the longest stretch there is 14 days.
Yeah.
In total, 28 days throughout the second half of the year. And then it dropped off, as you can see. So not really sustained above $40 an ounce. But now we have a very different picture, which I'll show you in a second.
Yeah, this was when gold was peaking, and that's what was pulling silver up. This time period was gold's big run, sometime in August, probably. Where silver peaked on this chart, right under that number 5. Okay,
this is what it looks like now.
Wow. Hi, it's Mike here. Just a quick message. I wanted to welcome the huge number of new visitors to our videos, but point out that less than 15% of our viewers have subscribed to this channel and hit the notification bell. We're heading into some turbulent times, so if you don't want to miss any updates, make sure you enable notifications. And thank you as always for clicking the thumbs up button. One more thing. At GoldSilver.com, we've been providing top-notch educational content for over 20 years. If you'd like to help us continue this mission, we'd be honored to be your precious metals dealer. It's a win-win. At the moment, you can get up to $2,000 in bonus silver by ordering from us. Check out GoldSilver.com in the link below. Thanks, and now back to the video.
This is what it looks like now. We're already 20 days in a row closing above $40 an ounce. And obviously we keep setting, record highs. We're building a lot of momentum. And this kind of momentum is sustained over multiple years. This chart goes back to January 1st of 2023. So we're seeing almost 3 full years on this chart. And it just looks like it's going higher and higher and higher. No end in sight.
Yeah. It would actually be good for silver to sort of take a rest. And I always expected it to as it runs into the $50 area. If it goes sideways for a couple of weeks, it works off the overbought condition that it's in and allows a lot more room to run. However, in a currency crisis, in a market crisis, all of that stuff, overbought conditions, it all goes out the window. None of that technical analysis matters when you have a true panic with the precious metals. The precious metals are a very special asset class that sort of obeys its own rules. And we showed that in our book, The Great Gold and Silver Rush of the 20th Century, when you get to the area, the section on Giffen goods, and the gift of Giffen was the section. And in there, we showed that something I noticed many, many years ago. If you take a chart of gold and flip it upside down, it looks like the stock market. It's got rounded tops when you flip it upside down and very sharp, spiky bottoms, just like a market crash. So when gold is going up and makes these spiky tops, it's the same emotions as a market crash for the rest of the economy. One last thing. This could continue right to the end of the year. This could just keep on going north, or it could take a little pause, like I said. It could do a little bit of a pullback.
And we could get that failure to deliver that Bill Holter was talking about at the beginning of the video. So there's only so much physical.
If that happens, you're going to see these things. I showed an analyst from TD Securities talking about gap ups. And that's what will happen. If there's a failure to deliver, it might be at $55 or something, and you wake up the next morning and suddenly it's above $100 or $80, and you didn't have a chance to buy between those times. We could be seeing the last of double-digit silver this month. It could happen all this month. Who knows?
Yeah, and we got Shocktober coming up, like you said. So yeah. We'll see. So our meme of the day. So a question that many of us face, the libertarians out there, libertarian torn between investing in shiny rocks or magic computer coins.
I'm invested in both, but I do sell off some of my magic computer coins now and then to buy more shiny rocks.
Yeah, shiny rocks. I got it all. So.
Okay. I want to thank you. This was a great presentation. I want to thank everybody for watching. Bye.
Invest and earn up to $2,000 in bonus silver at GoldSilver.com. It's easy. Step 1. Open any GoldSilver storage account excluding IRAs. Step 2. Purchase your precious metals. Step 3. Get up to $2,000 in bonus silver dropped straight into your vault. Visit GoldSilver.com/free silver to claim your silver.